Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please leave a 5-star rating and a review. This content is brought to you by Uphold, which makes crypto investing easy. You can buy, sell, trade, and earn cryptocurrencies on Uphold. I've been using this platform for years, since 2017. They have 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. So if you'd like to learn more, please visit the link in the description. All right, my friends, it was a wild day for the market because the Fed came out and said they are raising rates again, another 75 basis points hike, and the max pain continues. This is what we've been talking about. Obviously, I've been sharing my very amateur trading view chart of Bitcoin here, showing we are in that max pain zone, but it is an accumulation zone. And I hope many of you who are listening and watching understand this and the opportunity here. And you can accumulate here and prepare for the next bull market. Could we go lower? Of course, but this is why you dollar cost average, because the bottom could be in or it may not be in, but at least you're buying in the low zone, the accumulation zone. And we're going to continue to see the Fed raise rates to fight inflation. So expect additional pain. Now, my thoughts are maybe they're going to really slow down in early 2023, and then the market could see some sort of rally, not to new all-time highs, but just a market rally after a long sideways move for Bitcoin. And I know a lot of pain, right? Once again, we're in a max pain zone, and then you can swing trade that rally, but then ultimately we're headed to 2024 for the next bull market. So yes, you do have to deploy some patience, but the building is happening, my friends. And let's jump into the news because I got big news for you. First up, Instagram users will soon be able to mint and sell NFTs. The latest update to the platform's digital collectibles feature will first be tested among a small group of creators. So the Image Focus app recently launched its digital collectibles feature in 100 countries, allowing users to connect to their digital wallets and showcase NFTs that they either created or bought. The connected NFTs can be shown in your feed and include a shimmery effect to indicate authenticity. The latest update will allow creators to make their own digital collectibles and sell them both on and off Instagram, giving them an end-to-end toolkit for creating, displaying, and selling NFTs. The update will initially be tested among a small group of creators, including Amber, Victoria, Refik Anadol, Jason Saifi, if I'm saying that right, Dave Krugman, and several others. Instagram will also allow video-based digital collectibles to be shown on its platform and will add support for the Solana blockchain and Phantom wallet. Prior to this, the platform supported Ethereum, Polygon, and Flow blockchains, as well as connections to third-party wallets, including Rainbow, MetaMask, Trust Wallet, Coinbase Wallet, and Dapper Wallet. Meta, which is, of course, the parent company of Facebook and Instagram, noted that it will not charge fees for displaying and sharing a digital collectible on Instagram or Facebook, and it will not charge any additional fees for selling digital collectibles until at least 2024. It added, however, that digital collectible purchases made within the Instagram app on the Android and iOS operating systems are subject to applicable App Store fees. In addition, it pledged that neither creators nor collectors will need to pay gas fees for digital collectibles bought on Instagram at launch. My friends, massive on-ramp. Now, I know some of you listening, not a fan of NFTs, you don't own NFTs, that's okay. But I know many of you hold the tokens for the blockchains that those NFTs are going to be minted on, like Solana, like Ethereum, like Polygon, right? And if you have the native tokens, that's great news. So NFTs are a big use case. There's the artwork standpoint or perspective or item, but NFTs will be used in the real world when programmable NFTs come. That's NFT 2.0, where you can program an NFT to do something. There's going to be NFTs for houses, cars, and so forth. And the information, the metadata in those NFTs will update automatically. That's the future. Right now, we're in the artwork phase, and that's okay. Some people are going to be enticed by that. Some people are going to be fans of that, and some may not. That's based on your personal taste, preference, and so forth. But don't poo-poo the NFT technology, because that has legs. That is here to stay. And I'm very bullish on NFTs and the future of it. So we're seeing Meta, one of the largest companies out there, with obviously a massive social platform with Instagram and Facebook, integrating NFTs. People can create and sell. That is huge, my friends. Very bullish. And we had both Polygon, which Polygon, the native token is Matic. They tweeted out about this, as well as Solana tweeted out about this. So big news here, my friends. I'm really excited about this. Really big move by Zuckerberg here after all the criticism he's been taking lately over the metaverse and how that has been failing. But I think the metaverse is a real thing. It's going to have legs, but we're very early. He's really early with doing this, and the technology has to get better. Guess what? The Oculus and the whole glasses and all these things are going to get better, and the metaverse will be a real thing. It's just so early, and it looks like crap. So people, of course, are criticizing it. And, Facebook's investors or Meta's investors, they don't care that, okay, the metaverse is going to be something big in 5 years or 10 years. They're looking at the balance sheet, right? Are you making money? And right now the metaverse is losing money for Facebook. So that's the situation we're in right now. But my friends, NFTs are here to stay. This is a very smart move by Meta and Instagram. And I love that they are not charging fees. That's a smart move right there. And it's gonna get more adoption, especially from creators. And then you're gonna have a lot of people try to do this. So this is really, really cool. Expect in Twitter to do a lot around this as well. They've already started testing this. So this is very big news, my friends. Now, speaking of big news, guys, this should be getting huge headlines. We got a tweet here from some folks at Jpmorgan, and I'm going to read from Ty Lobin. I'm actually trying to get an interview with him. He tweeted out today, Jpmorgan has executed its first live trade on public blockchain using DeFi, tokenized deposits, and verifiable credentials, part of the Monetary Authority of Singapore Project Guardian. Many world firsts here. And since this is public chain, here's a transparent thread on what we did. Guys, it is Jpmorgan doing this. So while Jamie Dimon calls crypto and Bitcoin scam, garbage, don't talk to me about it, I will never invest in it, you're going to lose your money while invest in it. They're building, they're testing, they're setting up shop. This is why you don't pay attention to what they say. You watch what they do. Jpmorgan, while in 2017, when Jamie Dimon was criticizing Bitcoin, they were building JPM coin. We know they built Quorum, and this was based on Ethereum. They backed Consensus, right? They have a Bitcoin wealth fund now. Now they're testing DeFi, guys. See what's happening? So here's what he said. First, we used Polygon. Here's Polygon again. I'm so bullish on Matic for the trade because we wanted to do this on Ethereum. Now, Polygon is the layer 2 scaling solution for Ethereum. And he said here, and needed cheap gas fees for some expensive operations around identity verification. Future phases of Guardian will explore other blockchains too, given the Ministry of Singapore goal for open/interoperable networks. He said, second, we use Aave so that we could leverage their permission pools concept. We deployed a modified version of Aave Arc so that we could set certain parameters such as interest rate and FX rates. You can see the lending pool we deployed here, and they provide a Polyscan block explorer. He said, third, we issued tokenized Singapore dollar deposits. This is a deposit token, which is general liability of Jpmorgan. It's a native token giving stable on-chain value without the scalability issues of stablecoins. This is the first issuance of tokenized deposits by a bank. Guys, this is massive. And once again, look who's doing it. Jpmorgan. Fourth, we use W3C verifiable credentials to provide compliant access to Aave or any other DeFi protocol. VCs, venture capitalists, give much more fine-grained control than just allow listing addresses, risk limits, asset limits, etc., all possible. And we built on-chain verification of VCs. Wow. Wow, wow, wow. He said on-chain VC verification is huge. It brings composability to identity. You could have little verifiers that know how to verify certain things and use them across DApp or decentralized apps, bringing further standardization and portability to identity Legos, if I'm saying that right, paging, Provin Authority, and RH7. So he tagged some people there. Guys, this is pretty massive. I don't think folks realize what's happening. DeFi is here to stay. It has its problems. As I've said many times, DeFi 1.0, my God, it's been exploited and hacked so much. But DeFi 2.0, 3.0 will be much better. It's here to stay, guys. And this is why I keep saying we're still early and we have traditional financial players like Jpmorgan jumping in and building. So that has me very bullish. And look at the blockchains they're building on. Polygon. I've been loading up on Matic. That is not financial advice. Do your own research. Obviously, I have Ethereum, and I honestly don't have any Aave, but I'll definitely look into it. But I definitely have a lot of Matic. Now, here's another big institutional adoption news. Marex Global, which is a diversified global financial services platform, has made two prominent crypto hires to lead its digital assets offering for institutional investors. Everybody's setting up shop. Marex has hired former chief FX strategist at Brown Brothers Harriman, Ian Solot, if I'm saying it right, and 17-year financial services veteran Mark Arasatanam. My gosh, I butchered his name, but apologies. So Solot has was the former partner at crypto fund Tagus Capital and has also worked at private investment bank Brown Brothers Harriman and worked with the International Monetary Fund, so the IMF. Arasatanam, a 17-year financial services veteran, has recently worked at food startup M-Eat, an online shopping platform, the Chapar. The duo have been hired to deliver simple, secure products that help institutional investors gain exposure to crypto and decentralized finance. Marex plans to incorporate its expertise in custody, execution, risk management, and yield generation into digital assets. As we've been talking about, guys, big players are setting up shop. They're setting up the on-ramps for institutional investors, and they're creating all of the complex financial products that these institutional players can put money in. That is a healthy sign for the market. Shows growth, adoption, and more capital going to be flowing into this market. Now, Flare networks. I know some of you, when I talk about Flare, it's a bit of a pain point because some of you did not get your Songbird tokens. I understand with the exchanges. We know Flare, we're still waiting for the airdrop of the tokens. We know they have reached full decentralization, so they are starting the process of getting the exchanges to deliver these tokens. We've been told that it's in January, but this is something big. Flare is working with Google Cloud. There was a blog post on the Google Cloud blog here, and the title is Flare Network Gives Blockchain a Boost with Groundbreaking Protocol Running on Google Cloud. So really great exposure for Flare, and Google is, as we talked about it just a couple of days, they're launching blockchain node engine, fully managed node hosting for Web3 development. And the first blockchain is Ethereum. As you can imagine, they're going to integrate Flare at some point. So really great job by the folks at Flare for doing this kind of PR partnership here, highlighting how Flare is leveraging Google's cloud. And I'm sure, once again, there's going to be some integration here of Flare eventually. So here, Google, they tweeted out, read how Flare Networks launched a blockchain which presents developers a simple and coherent stack for decentralized interoperability based on power, security, and scalability of Google Cloud. Really, really big news and really great exposure for Flare. Once again, I know we're all waiting for our tokens. I can't wait. And I did get my Songbird tokens because I did the self-custody, kind of setup where I got my tokens direct. And I'm hoping, everything goes well with the Flare token distribution. All right, moving ahead, Crypto.com partners with Visa to launch a FIFA World Cup 2022 NFT event in Qatar. So the crypto mass marketing continues. The partnerships with traditional financial players continues. This is all bullish news. Philippines Union Bank launches Bitcoin and Ethereum trading. I'm going to say it for the 1,000th time. Banks, stock exchanges, credit card companies, payment companies will all offer crypto trading in custody. Book it. It is happening. It is unfolding right before our eyes. Finally, some not so good news. Deribit Exchange. I've never heard of Deribit. I have not used Deribit. I don't know if some of you have, but apparently their hot wallet got hacked. They said their client funds are safe and the loss is covered by the company reserves. So they have insurance. That's a very good thing. I love that. And they're being transparent about it. Their hot wallet got hacked for about $28 million earlier this evening. This was tweeted out today, midnight UTC on 1st of November, 2022. So I don't know if some of you used, this exchange, but it looks like everything's okay. They have an insurance fund. That's what I want more exchanges to do. Have insurance, have better security. And if something does happen, you don't lose your funds. As I've said many times, I use a Ledger Nano X. I have multiple ledgers and I have my crypto on there, the majority of it. I have some on exchanges that I swing trade and do different things, but the majority of my long-term holds are in hardware wallets where I hold the private keys. So I highly recommend you guys go that route. If you want to use Ledger, there's an affiliate link in the description. Once again, I'm a user of the product and you can, leverage that that wallet if you don't have one already. But good one. Once again, the silver lining here is there is insurance, and thank goodness, because it would really suck if they lost $28 million and they couldn't cover users' funds or get it be able to provide those funds back again. All right, my friends, that's the news. Big news day. This Meta Instagram thing with NFTs and what Jpmorgan is doing. This is massive. I'm going to dig deeper into this because, once again, one of the largest banks in the world doing DeFi transactions on Polygon and Alve and so forth. Really, really big. All right, guys, let me know what you think. Share the video, share the podcast, and I'll talk to you all later.